Rage on that beat, going crazy.
We don't do that here. Hey, good morning, good afternoon, good evening. Welcome, guys. We're gonna do a small little simulation over here for a gold and a. Let's have a look at this. Let's go have a look at this. We're gonna go on random date calendar. Let's just set everything up over here. So we're gonna go on. Let's do about like 10 dates. Let's take about 10 dates from January and let's go up towards 27. 27. Nice to see you guys in the chat. I see you in there, Yost. Ishwa P. Ellie. What's good, guys? J Moloa. Robel. What's up? All right. So we're going to do from January to June. Yeah, I think from January to June should be good. We're going to start here on a Monday. So I'm going to need some help, guys. I want you to help me, pick a date over here. Should we do January? We got January. We got this is February 10th. We got February 10th, March, April, May, June. What should we do? Right in the chat. What month should we do? The thing about simulations is you don't want to go so far back because if you go so far back, it doesn't even make sense anymore because those are like much older market conditions. So you always want to do like about the previous 8 to 9 months that you want to be back testing. All right, so I see someone in the chat said February, March. All right, we got more March in the chat. We can go with March, January, February, March. We can go with, this is March 10th. Okay, March 10th. So let's just start up the simulation over here. I've already updated, but usually, you have to come onto your simulator and then click on update. Then you're going to update so you get the most recent PA over here. So you see we got the simulation up until that's the 15th. And yeah, I think it's pretty good. All right. So let's go on load simulation. Oh no, actually it's new simulation. And we have to add in our date. So we got March 10th. Over here, we're going to start with a $5,000 account. And yeah, 1 to 500 leverage on this should be good. What else? Yeah, we got fixed spread. Pretty much everything is just standard. Start simulation. And for this simulation, I want to focus mainly on the 5-minute time frame. So we're going to do the 5-minute time frame, and we're going to do the 1-minute time frame, and maybe the 30-minute time frame. Just to go and have a look at what's happening a bit on the higher time frames. So let's go ahead and set our templates here. So we're going to go onto TetraFX template. Load this up here. Make sure we're all zoomed in. And we're going to go on the 5-minute time frame. Then we're going to put our template in here as well. 5-minute only. Yeah, we're gonna focus. I think on the 5 for execution and the 1 minute. I think the 5-minute entries are gonna be really good in terms of in terms of seeing clean ranges. That's how the 5 minutes. So that's how we're gonna use the 5-minute. So when we're looking for let's say a running position. Oh, what's happening here? Wait, what did I do? Scale fix. Oh, okay. All right. I thought I broke something. All right. So let's go 1 minute and then we go properties, scale fix, 30-minute properties, scale fix. Yeah, we're gonna try and see how we can use clean ranges. We're going to look at the power of clean traffic on the left-hand side for holding potential runners. All right, so let's get our sessions here. Sessions all set up. So we just want to fast forward this up until pre-London time. Because, when you're looking for when there's volume in the market, you're looking at mainly, the Asia session during the Sydney Open. There's usually some volume over there. Then we have a pre-London time. So we see we're going up towards pre-London now. So you got 8 a.m. Should be like 8 a.m. Eastern over here. So we got some pre-London time, or rather on the simulator, as you can see, we have the London Open. That's going to be at 11 a.m. on the simulation. And we got pre-London starting here from 8 a.m. So I was looking to see like, okay, so when is there going to be, you know, some kind of a volume in the market, you know? So you gotta see like, these are the best times that you want to trade the market, at least in my opinion. You know, that's when volume is coming in. So pre-London, London Open, and then you got New York session. And I think for the New York session over here, the best time to trade the New York session is going to be at least the first 2 hours. Open, then you got 1, 2 hours. It's usually the most potent time to be getting involved when you're looking at trading the New York session. And then, you know, then market starts to die out here towards the London close. So for what we typically do on stream is we're trading, or rather I trade the pre-London right here, and then we trade the London time for 3 hours. That's what we typically do on a day-to-day basis. You know, and then sometimes if I don't get my trade, let's say during the... Oh, sorry guys, I gotta turn the music off. Yeah, okay, awesome. So I turned the music off. I think the music was a bit too loud. But usually if you don't get it during this time, then we have our last shot over here. That's going to be right before the New York session opens up. So anyway, let's see the price action for now. We're going on the 5-minute time frame. We're looking at pre-London time. This is a 30-minute. This is a 1 minute. Here's the 5-minute. So let's see what kind of potential. Man, I haven't done this. I feel like it's been such a while since we did this over here. So we're going to be looking at some plays. See what time this is. This is already 8. Heading to 9. All right, so getting some kind of a retracement right now. I'm still looking for some kind of like clean ranges. Correct? So we could go at the 30-minute. Let me make sure I'm zoomed in properly over here. Actually, let's stay on the 5-minute because we have a resistance that's just been formed over here on the 5-minute time frame. So okay, so this could look pretty interesting, you know, because let's go one more candle. All right, so this is looking pretty interesting here already. Big week ahead. Good luck, everyone. Thank you, Yazin. Yeah, we got a pretty big week here. So we got Trump and Putin had their meeting. I haven't really looked into that yet, but it should be affecting the markets. We should be getting some kind of movement. But now we're gonna pay attention to what the market does on the open. If gold is gonna be moving during pre-London, man, that's gonna be a really nice signal for us. So anyway, we got a resistance over here. So this is gonna be, we're on Monday. Okay, nice. So we're in Monday right now. This is gonna be potentially the first trade because I'm looking at a range here. This range is about you know, we're looking at about 15.6 pips up towards this resistance over here. So I hope you guys can see this clearly. Yeah, it looks good on my end. So we got about 16 pips up towards this resistance. So what we would love to see is if you're trying to get in on like an impulsive entry, then that means at the break of the highs right over here, we can take a buy expecting that price is going to keep moving up towards some kind of resistance here by 29.11, right? So now if we don't get the buy and the price moves down, we can't take a sell because obviously, you know, you have some rejection wick over here. You know, you also got a support area down over here. So, you know, how are you gonna take a sell? How are you gonna take a sell? You see that price is rejecting this zone. So if price is rejecting this zone, you're thinking to yourself, you know, okay, so if we have a rejection wick and this candle is breaking this previous candlestick lows, so what's the probability then this becomes a liquidity grab for price to move up? You know, what's the probability? I think probability is pretty low right now. And the only reason that the probability is low right now is because we haven't yet had price move. You know, it's pretty low. It's like a 50-50. it's like a 50-50, you know, because the next candlestick can open up and then just continue giving like a wick fill. And then that's what you're going to see over here. It's just going to be a wick fill of this previous candlestick. Correct? So right now it's like 50-50. But the only thing that's going to increase the probability that we can use as confluence that price can move up is only if maybe, you know, a candlestick can close above resistance and break its previous candle highs. Then we can look back at this and say, you know, okay, so that was a potential liquidity grab. You know, we also have, oh, I see we got Woods in the chat. Hey, Woods. Welcome, welcome. Yeah, so we also have support area here on the left-hand side. And if you notice what's happening, so this kind of looks like a V-shaped reversal already because we broke below support and now price is starting to pull back upwards. Now, if we respect these highs, that means price can continue moving down. Then essentially this becomes a new lower low. Correct? But that means we shouldn't break up these highs, especially because this candle here has already taken the highs. So notice you got one liquidity grab here at the lows, and you got one liquidity grab here at the highs. Correct? So now it's like 50-50. It's like the market's not going to decide where it's going to go. So now we have to wait for a little bit of price action. So right now we got new 5-minute candlestick has opened up. We have a pretty nice, so you know, we have kind of like a bullish bias. To not miss this move, I'm thinking about getting into an impulsive buy if we can start to break above this wick by 29.09. You know, if we can break that wick with volume, then I can consider a potential impulse buy. But for right now, what I'm going to do just to be on the safe side is I'm going to wait for a candlestick to close. All right, so we got candlesticks, you know, 8 SMAs holding price action quite nicely right now still. We got to wait. You know, you have to wait for those candles to close, especially if you're not sure about the trade. If we can get the closure, I think that's going to look a lot better because then we're going to get like a potential, what do you call it? A potential shotgun entry on this. But that's if we can get the candlestick to close. We have about 1 more minute. Oh, it's already starting to break. It's about 1 more minute, 1 more simulation minute. I'm just going to wait for the candle to close. Since it's about to close right now, we have about 30 seconds. All right, so candlestick has now closed above resistance. So if we close above that resistance point, as we said, now we want to see this next candlestick break these highs to increase the probability that we can continue to move up bullish. You know, so where are we going to put our stop loss, guys? So we got our entries right in the chat. Where can we put our stops? Then we're going to decide, you know, whether we're going to let this thing run or, you know, secure some partials as price keeps moving up. You put it at the lows. All right, so we got the lows here. That will be around a 11 point, let's say 12 pips. So we're going to risk around 1.50%. And we're going to have a 12 pip stop loss as we break these highs. So let me slow this down. Okay, so it looks like we're already getting the break. So I'm going to take a buy here with my stop loss right underneath the shotgun entry candlestick. And you know, another reason why this is a really good stop area here is because we have our 8 SMA confluence on this as well. So this should be protecting as a form of dynamic support. So if this candlestick comes down, you know, sometimes it can act as a form of dynamic support. So the range is pretty small here. So what I'm going to do is if price comes up and taps this area, I'm going to put my stops to break even and then look for like about a, oh, actually I want to risk 0.50. It did not add the 50. All right, so I'm going to take another buy here. So that's going to be now 0.50%. I was looking at the rejection lows. I'm going to speed this up here a little bit more, chat. Let's go on like 29 ticks. All right, nice. So we're starting to move up already. Let me go on my trades. So this is where we're going to monitor our trades. Let me put it somewhere. Where should I put it? I'm going to put it here. I'm going to put it here. Let's see how a candlestick here closes. I'm going to be looking just for about 1.50%. Yeah, okay. I'm going to put my stop loss here to break even, guys, because now we've sort of tested this area here. So we want to be safe, you know, at this point. So this is actually a really awesome opportunity to show you how risk to reward can really make you miss out on a lot of trades. Because, you know, if you get like a negative RR here, so you're not going to be able to execute. So you're going to say to yourself, let me just avoid this trade because it's a negative RR, correct? But now we're at least stuck into the position. So we've given ourselves the option of at least having this trade. You know, right now it's like a risk-free trade. You know, so you never know how long the market can trend for. Look, we're up about, I think I'm just going to secure it here, resistance. Because you never know how long the market can trend for. Because, you know, these levels here, we're meant to actually break these levels. We're meant to go through these levels. So, you know, you give your chance an option to at least get stuck into a potential move. So let's see where price goes next. Because, you know, it's coming towards some kind of resistance here. So this is going to be like very sketchy PA at this point. So we don't know if like, you know, price is going to get through these levels here on the left-hand side, or if we're going to reject these levels and then price can come down. Because, you know, all we wanted to do was catch just a small piece of the cake here on the left-hand side. So, you know, we've already filled up that range. That was about, you know, like about 16.5 pips. So I think that was it. That was a move. This is exactly what you want to try and avoid, is when you see price coming towards a level like this. This is a low probability runner, correct? So when you have so much supply in the market, you get low probability running trades. Okay, so it looks like it came back down, then retraced back upwards. Awesome. Nice way to start off the simulation. I think what we're going to do here is, let's just go over to the next day. Let's just go over to the next day. You know, this is disciplined. As a disciplined trader, we can just go over to the next day. Wait, how do we do this? Let me change this. And stick to just, you know, like maybe 1 or 2 trades per day. All right, let's load this up. Come here. And just monitor the way price is acting right now. So if you just look at the PA right now on the 5-minute time frame, oh wow, volume is starting to really kick in. You don't really have anything too appetizing looking here. We see we have some kind of volume from the left-hand side. Like price does look like it's pushing upwards. So maybe already we can anticipate some kind of bullish continuation for the London session here. But at this point, I'm not seeing any sort of entries for the buys, but we do have a support area down over here by, this is a 28.95. And we got another support area down by this level over here. So that's about 28.90, 28.90-ish. So this range is about, let's see, we got about how many pips here? About 45. Yeah, for about 45.5 pips. No trade zone. Oh yeah, that was a good trade. Yo, what is the indicator called for the risk trade calculation? You can use that in live markets. No, you can't use this. This is just for the simulation over here. For live markets, what I typically use is there's an app called Lot Size. Wait, let me go on the website real quick. It's by tomarkets.com. Let me see if we can go here, tomarkets.com. So whenever I want to calculate my lot sizing, let's go on Google. Oh, what's wrong with the Google? It's not loading. TO Markets. And you can get this app. It's a pretty nice app. I've never used it on the desktop, but if you get the app, I think it's really nice. Let's go TO Markets lot size calculator. Yeah, then you're gonna go here, US dollar, XAU USD, amount to risk, you know, like $500, and then you can put your stop loss. If you got like 20 pip stop loss, you're gonna put it like this, and then it's gonna tell you use a 0.25 standard lot size if you're risking 20 pips on gold. Right? Yeah, it's pretty nice. It's pretty accurate because you know a lot of these lot size calculators, you know, they're kind of like a hit and miss a lot of the time, but that one is pretty accurate. All right, so we see price is coming down, but if price is coming down, now we're gonna go on the 30-minute time frame and see why is price moving down. So this is where we took our buy, and then we chopped around. Looks like price retraced bearish, and it's already sort of like filled up some kind of range on the left-hand side. As you can see, we just had the same entry model that happened over here. So this was like the same. This was like the same trade that we just took. You know, candlestick closed above resistance. Next candlestick broke the previous highs with clean range on the left-hand side. You know, clean range on the left-hand side. So this was actually a very nice shotgun play. Can you drop the link for that, please? All right, let's go back here and drop the link quickly. So trio markets lot size calc. Yeah, we're gonna do this fast, guys. Don't worry. We're gonna do this fast. Let me drop the link off here for Luke. Gonna drink the link off here. Awesome. So yeah, you see this? This is basically the same idea that how we took our last trade right over here. And it's already filled up the range on the left-hand side. So I would say there's a pretty nice probability that price can break below support to continue heading down towards, you know, some kind of support level down over here as well. Because we have a range here that's about, you know, roughly about 100 pips. 100 pips. So let's go on the 5-minute. What are we going to do? Should we wait for a candlestick to close? Should we wait for a candle or an impulse entry at the break? Let me go on the 1-minute time frame, because I think stop loss is going to be pretty big. Let's see if we can get a consolidation entry on this. All right, so it looks like it's currently breaking right now. Can try take like an impulse sell here as price breaks below these lows. Let me see if I can get a tight stop loss on the 1-minute, then I'll take it. I need to see some kind of a retracement for price. It would be nice to get some kind of a resistance being formed. Let's go next. Oh, okay. I did that too quick. Let's go back here on the 1-minute. See my resistance. Okay, awesome. So it looks like I did get my resistance. So what I'm going to do is I'm going to look for a sell here. And stop loss above this area, about 14.5 pips. Let's say 14.5 pips. 14.5 pips. As price breaks those lows. So what I'm exactly doing here right now is I'm taking a trade on the 1-minute time frame, because this is like an impulsive entry. Oh, you see it broke pretty fast there. It broke pretty fast. I'm going to take a sell nonetheless. I've taken a sell here on the 1-minute, expecting price can continue to move down bearish. So I'm just going to look for about like, you know, 1-to-1 on this move. See what's going on here. We're up 18 pips. And we're risking around, yeah, just about 14. We're up about, I think that's 2 pips actually. Yeah, that's 2 pips. Let's see how we can manage our risk. This is kind of like a real volume based play. So if price starts to give me a hard time, I'm going to be very cautious about any sort of pullbacks that could be happening here at this point. You know, I just want to see how candlesticks are going to close first, because we're just getting our initial break. All right, I'm just going to skip this candlestick. Let's see. All right, so it's pulling back. Yeah, I'm going to be very, very cautious, because if I'm taking a sell like this, I really want to see this range here get broken. So what can we do here to manage our risk? You know, what do you think would be the best option if we're just looking at the data that we have right now? What's the best option that we can do? Because, you know, this is a situation that sometimes we get put in the market, and it's not a very comfortable situation. I think we can all agree that something like this is not very nice, you know, because, you know, you take a sell over here and then price pulls back. We have our stop loss within the range. I'll adjust it towards the candlestick highs if it does start to pull up. But what can we do in a situation like this? You know, we've already taken the sell. And if price gives us a hard time, or if it keeps moving down, what can we do? Because, you know, once you start thinking in terms of a not much, yeah, I think once you start thinking in terms of risk management, because now that allows you to kind of like feel more relaxed about the position, because you kind of like have some ideas of what you're going to do. I think the first thing we can do is, if this candle here closes bullish and then re-breaks its highs. So let's say if it gives us an option like this and then re-breaks its highs, maybe we can just close the trade, you know, because now it's giving us like a hard time to continue moving down. We could just close the trade, because that's going to create some sort of structure here on the 1 minute time frame as well. It's probably going to be doing something like this on the 1 minute at that point. You see how we create one resistance? It's probably going to pull back upwards like this. And the next time it breaks the highs, you know, that's going to be a losing trade. So, you know, we can manage whatever risk that we can manage if that happens. Now, the second option is, if price comes down and breaks these candlestick lows, we can put our stop loss to break even. You know, because at that point, we're just expecting that price can continue moving down. So let's just see. Now we have two options of how we can manage risk. But yeah, for right now, we can't do much. We just have to wait for price to play through. All right, so candlestick close bearish. Good sign. All right, candlestick broke and closed the lows. And it broke down about, how many pips is this? Oh, you know, I skipped it too fast. I skipped it too fast because I wanted to secure something. But as it's breaking the lows, that's when you put your stop loss to break even. You know, and now we're down, how many pips are we down? We're down about 17 pips here at this point. We're down about 17 pips. Let me see how much of this range here has been filled. All right, we still have some room for price to continue moving down. We haven't yet hit 65% of the range yet. So what we can do in a situation like this, let's say if you want to hold a running trade. Let's see if I can delete this. So if you want to hold a running position, what we can do is we can come over here and, wait, not this. We can close partial. So, you know, we can come here and we can close, let's say 80% of the position and stop losses to break even. So at this point, you know, we can just let the rest of the position continue running. See if we can at least fill up some of this range here on the left-hand side. But yeah, this becomes a risk-free trade. Okay, so it looks like I got stopped out here. Not bad. Not bad. We gave it a shot. We gave it a shot for bearish continuation, but it looks like it's pulling up again. Let's see what kind of structure that we can get here next. Because what I noticed was on the 30-minute... Oh, okay, never mind. Never mind. I thought we were trending. Let me see what sort of structure we can form. We have a resistance here. We have a small range. This is roughly around 15 pips, 14.5 pips. So if you remember the first trade that we took, we had a similar situation like this. So remember, like, price came down, created a kind of like a support area, and that looked like some kind of a V-shaped reversal with some clean traffic on the left-hand side. So exact same situation that we had on the first trade, we're having here again. But obviously the first trade looked a lot cleaner. But it's the same exact situation that happened here on the 30-minute time frame. You know, as candlestick came and closed above this resistance and broke the previous highs. And then, you know, price continued to move up bullish to fill up this range. I'd prefer to just take, I think, rather than be an 80%. Yeah, we can try. You know, the thing is, I want to try is to leave some kind of like a running position for the simulation to get really good at trying to catch some more runners, or rather to help people catch runners. You know, because when you secure something at break even, then you accept the break even outcome. But if you don't secure anything, then, you know, you kind of like marry the bias. You kind of marry the trade. And when you marry the trade, you know, it's much easier to mismanage the position as well. Oh, what a beautiful consolidation breakout. Up already 13 pips. Holy. Man, should have been more locked in for that one. So now we got the candlestick already moving up. If I take a buy here, maybe put my stop loss about, you know, 16 pips. This is something that we typically do is if we're going to take like an impulse entry on the 1 minute, we're usually going to use a max stop loss of around 16.5 pips. Like this. And then we're going to put our stop within the range, expecting that the 5 minute can keep moving up bullish. But here's a catch. Here's a catch. Since I've come in so late, I need to be extra aggressive about this position. Because if I start to have some really strong drawdown, then I want to, you know, look to see how I can reduce my stop loss, how I can manage my risk. So I'm already going on the 1 minute time frame to see how I can do that. And if we go up towards that resistance, I'm going to put my stop loss to break even. You see how we're creating some structure? Notice what's happened over here. We've created a support. So the market is not yet being aggressive towards our position. It's not telling us anything yet that we should reduce our risk. You know, maybe if we start coming down and create like another support, then I would consider reducing my risk. But you see, for right now, it still seems fine. Price is still moving in our direction. You know, so I think you got to go on the WAP database on how to trade these consolidation breakouts, and you got to know exactly what I'm looking for here. All right, perfect. Now, this is my option that I can now modify my trade and put my stop loss below structure. So you see, instead of risking now 16.5 pips, I'm going to be risking 5.2 pips, which, you know, I think is already a win over here. So you see how that risk to reward also changes because the market is dynamic, correct? So you see how the risk to reward now changes? And we are currently at a resistance as well. Man, I don't think there's a reason that this should become a losing trade here at this point. So I'm going to put my stop loss to break even. And we're currently up right now about a 1-to-1 risk to reward. Let me just monitor this. Because, you know, the confluences I'm looking for on this trade is a potential fake out that we got. Because if you look at the 30-minute time frame, look at the way the 30-minute candles have wicked down below this area over here. And you have 30-minute resistance. And you have another 30-minute resistance all the way up here towards 2908. Correct? You know, this range, we have a range of about 78 pips. So what I think we can do is we can close like, you know, 80% and then just let the rest of the position run. Because, you know, if you secure something, then you're not going to be married to the position anymore. All right, let's just see how this plays out. Yeah, I think I'm gonna close 80% of my trade here. Let's close 80%. Stop losses to break even. Go back on the 30-minute. Because you see how price is moving right now? Like there's no reason that price should come back into our entries at this point. If you notice, this was our entry right over here. And it's starting to break above resistance. It's starting to break above these wicks with clean range on the left-hand side. So stops at RSI is a good move. No, not using RSI. Not using RSI. And we also got our SMAs here as well. So that also looks pretty good. You got the 8 and the 50 SMA. Holding price up. We've already secured profits. So, we're not married to this trade anymore. We can just let it do its thing. Maybe so we're not super greedy. We can secure some profits, not all the way at the top of the range, but we can secure some profits somewhere around this area over here. If we can fill up this range about 53 pips. Oh, I hope that's not liquidity grab. It's coming down heavy. Yeah, let's see. So this is what? Our 1, 2. All right, nice. How high can we go? I'm looking for maybe... Oh, don't come down. Oh, don't stop me out. That was such a good push. We got to see now if the SMAs can hold price up. You see how the SMAs really come in handy? Over here, really solid form of dynamic support that's been formed. Come on, pull up, pull up. You can do it, SMAs. Look at that beauty. Look at the way our SMAs come in handy over here. Just holding price up. Come on, SMAs, you can do this. Holy! Man, almost getting stopped out on that one. Come on, you can do this. TFX SMAs. You can download the free SMA indicator in the description box. Really nice confluence. I think it really helps with psychology. When you have some kind of backup like that, it really helps you with psychology. All right, so it looks like we're coming up to our targets here. Just about coming up to our targets. 6.70%. 6.80%. 6.90, 96. I'm securing this. I'm just gonna take my partial, whatever was left of my partial here at resistance. Yeah, and I think that's gonna be the move. I think that's just gonna be the move for this setup over here. I think that was a pretty good trade. Let's see how far it can actually have gone, because that was a range now we use on the left hand side. So remember, it's the same thing. Literally the same thing that happened over here. And the good thing about this previous move was this previous move here was such a nice move because, price had already come down. It already retraced down. It consolidated. And guess what you got over here? You got the market show you a liquidity grab. So it did a liquidity run before closing the highs on the left-hand side, re-breaking those highs and then filling the range. So for this move, I think this was the actual move. This would have been a really nice move to catch. And you also got your SMA confluence in there as well. So essentially, the markets move bearish, sideways, bullish. Sideways, bullish. Break and retest. You see this? So these are the only 3 ways markets move. So I think this was really nice. This was a really nice, what do you call it? This is a really nice price action that we got today. It's very clear. You can clearly see the sideways movements. And that was also a really nice confluence as to why price gave us this volume so that we can come up towards our resistance over here and then tap this resistance. So let's hope we can get some of this PA next week. Because now this is January, February, March. This is on the 11th of March that we're doing this backtesting. So, I think March was a pretty good month. I think March was pretty nice. So, we're going to see. We're going to see what happens. We're going to see what happens next week. But let's just go over to Wednesday. This is now mid of the week volume. All right, awesome. So it looks like, price moved up for the whole day, and then we consolidated over here up until Asia, all throughout Asia, and now we're back again at the London Open. Nice. And look at this. Back here at the same exact time, and look at what the market has given us. Wait, I gotta go properties, scale fix. Okay, that looks nice. So this is very simple analysis here now. You have resistance and you have a support over here. What else do you guys notice from this structure? What else do we notice from this structure here? Anyone? What else? Imbalance? No, remember, keep it simple. Just keep trading as simple as possible. We mentioned this already. Yeah, we have clean ranges. Awesome. Yeah, we got Woods consolidation. Yeah, exactly, guys. So it's like the same thing that happened all the way back over there. I was showing you the example of the 3 directions that the market moves. You see, it's moving downwards, sideways, bullish. Now, you see, the problem is when we start to learn a lot about trading, obviously, then we can start to complicate it more. Then we start to see, the fair value gaps and the RSI over being sold and all that stuff, Then it kind of throws you off, just the basic price action. But if you keep it simple, I would say most of the time you can have a winning trade. And that's the whole idea behind TFX concepts. It's just to keep it simple. So the imbalance and all that other stuff, that's going to come later on. That all that other stuff is going to come later on as a kind of like a confluence. So if you're looking at price here, we see markets consolidating. And if we break these lows, we can say this is a potential liquidity grab for price to continue moving down towards this next support area over here. You see, there's nothing new. You don't have to reinvent the wheel. There's nothing new that I'm doing differently here. It's the same thing. Clean range to move up, clean range to move down. Yeah, if we move up, man. And the thing is, if we move up, we have a range here. This range is 270 pips, I think. Wait, no, 27 pips. My bad. I think this is a 27 pip range. Yeah, that looks like this looks like a 27 pip range. Yeah, 27.7 pips. I was like, wow, 200 pips? I was already getting excited here. I think this is 27 pips. And sells, we got about 14.7 pips for the sells. But that's the thing anyway. The buys look a lot bigger, The buys look a lot bigger. It's all about volume because some days gold will have the same exact range and that range can even be like worth, 100 pips. So it's all about like just the volume that's in the market. So you see this 5-minute candles here? They look big, but the 5-minute candle is only about 11 pips. This one right here. So, all right, let's see what we're going to do. I think it's already pretty straightforward for us. Sells if we break these lows, buys if we break those highs. And then we're just gonna take it down towards support or resistance. You got a nice little SMA confluence in there too. Okay. Oh, all right. There it is. There it is. Stop loss just above this area. We could put the stop loss above the candlestick. We could just put it within the range. Here about 11 pips. So let's do 11 pips. And then take a sell as we're breaking the candlestick lows. And we can have our stop loss above this current candle because now you're telling yourself that if price is to move down, then it should not be reflipping to break its own highs. Correct? So, that's not how price moves. Price only moves like that when it's faking out or, that sort of thing. But generally speaking, when you get clean price action, if a candlestick starts to break such lows like this, we're expecting even if this one closes, that the next candle is going to open up and then continue to move down towards our support area over here. So I'm not going to close partials on this move because, it's like I don't think there's much of a range, because you have like the next support area just down over here. So there's really not that much of a juicy range so that we can close some partials. So I'll just look to secure like, you know, actually before anything, let me put my stop loss to break even. Yeah, I'm just going to look to secure here by support area, 29.12. Stop losses to break even. Because you know why our stop losses to break even? Is because we've already filled up majority of this range. You see, we're coming down towards that 65% of the range that's just about getting filled up. So, you know, you can secure something here, or, you know, you can put your stop loss to break even. I think either way is pretty nice. But we just want to manage our risk. Oh, okay. Okay, so I got stopped out here. I got stopped out. Looks like we came pretty close towards that 65%. And that's why I usually start to manage around these areas, because we don't know what can happen. You know, price can just fully reject that zone and then continue to move up bullish. Yeah, so looks like I did get stopped out. But there's a silver lining here. What do we have? We have resistance and we have another resistance. We don't have any buys. Actually, if you look at the PA right now, it's much more harder for the price action to move down than it is for it to move up, because this candle wick has already retested that area. It's already dipped down below this zone. So where's the range? You know, how would you feel if you took a sell over here? You got to also see, like, how would you feel? Because a lot of people are going to feel the same way in the market. Where can I play back the markets like you do? This is called Soft FX Simulator. So just go on to Google and type in Soft FX. This is a MetaTrader 4 simulator, but I think you also got it on MT5 now as well. So it's a pretty good simulation over here. Yeah, I think what we're gonna do, guys, we're gonna do like 2 more trades. We're gonna do 2 more trades, and we're just gonna see if we can get like some kind of a run over here. You know, we're up about 6.93% so far in this simulation. And why are we holding a runner for potential buys, guys? Can somebody write it in the chat? Why are we holding a runner for potential buys, or why are we just thinking about buys and not sells? You know, like why is there a potential for price to run bullish at this point? Because, you know, this is a situation you're gonna be in. Mark my words, tomorrow or Tuesday or Wednesday, whenever you're gonna be trading New York session, Asia session, you're going to be in this position, and you're gonna think to yourself, should I hold a runner? You know, what am I doing here? I want to hold a runner, but I don't know if I should hold a runner. Then you're gonna think about the simulation. You know, think about, why would you hold a runner for buys? If it breaks them highs, clean range, exactly. If it breaks the highs, you got clean range. Man, that's it. That's it. You're on the 5-minute time frame. So next time you guys are trading, just think about it from the 5-minute candles. Okay, wait, we got price already moving up here. I don't wanna miss this move. What should we do? What's the safest option for us to do here? I'm gonna let the YouTube chat decide. Should we take an or like, you know, any chat? Should we take a buy, like an impulsive buy, if it breaks the highs, or should we wait for the candlestick to close? Because we have 2 options. And remember, if we wait for the candles to close and it moves without us, you know, that's fine. We have another range over here. We have another range. That's going to be about 27 pips. But what should we do here? Should we wait for candle to close, or should we impulse entry? Supports are very close and resistance have space. We rejected support multiple times. Yeah, exactly. Beautiful. That's exactly what I want to hear. So that's all the confluences that we have. We have support over here. We've rejected it multiple times. Now we only have a decision to make. Very important decision. Whether we wait. All right, let's see. We got Crumpy Monk says wait. Now, whether we wait for price to close above resistance, or we take an impulse buy if it breaks these wick highs. Now you see we have a really important decision to make over here. The reason why you'd be comfortable with an impulsive buy is because look at our SMAs. You know, you have SMAs in your favor in Confluence. They could really support price to move up. So last chance, guys. Are we waiting for impulse, or are we waiting for candle to close, or are we doing impulse? I'll take it off the 1 minute. Let's see the 1 minute. You take it sort of consolidation break off the 1 minute. Yeah, 1 minute looks good. You know, Luke, actually you have 1 minute entries already at play right here. So you got a stop loss right below here. That's about 14 pips. So the 1 minute entries just got retested. So this would be where I would actually take a buy. Let me see. Why would I take this buy, guys? Like, come on, this is so... You can't make this shit up. Like, literally, it's the same thing we talk about every time. We have a reversal confirmation signal right over here. So notice how price consolidated, broke below the consolidation, and then hesitated. And remember, every time the market gives you a hard time like this, that's the market warning you that it's going to have a potential reversal on you. And you know, if you get the buyers in, man, the buyers are looking at that clean range that we have here on the 5 minute and the one that we have even above this highs. So if you actually took this off a TFX consolidation play entry, man, you would have a really, really, really nice runner. So yeah, I would say this would have been the entry for the 1 minute right over there, and that's currently playing out. All right, so we got wait, impulse, swing trade. All right, let's do a swing trade. But I think the stop loss is going to be too big because I see we already have a consolidation play already in motion, so I don't think we need to risk all the extra pips. We can just put it below this candle over here. That's going to be about, you know, like 14 pips. Let's do about 14 pips then. But I want to see it re-break its highs. Okay, so it re-broke its highs. So I'm going to take a buy here. My stop loss within the range. $14 pips. Remember, we're rejecting support area here on the left-hand side. So this is going to be a swing entry. Or let's see what happens. Right now, it's like a swing entry model with a tighter stop loss off a consolidation that's currently in play. But if it re-breaks this highs, that's going to be a shotgun entry right here. If this candlestick can re-break the previous candlestick highs. All right, so shotgun entry. Now we have 3 entry models. We have consol, we have swing, and we have shotgun. All right, looks like we tapped into resistance. And we have shotgun. So we have a lot of confluence. Rejection wicks, clean range, and clean range above this next resistance over here. Okay, holy. Wait a second. I gotta close some partials. So let me close again 80%. Man, you see how confluence works together? And when you have a playbook where you can get your plays happen even all at once like this, I think that makes your trade so much more potent. You know, we also have our SMA dynamic support confluence, the 8 SMA. You see, we got the oh, hold up here. I gotta lock in. We also got the 50 SMA. So this 50 SMA here could actually give us a hard time. You know, so I think the smartest thing to do at this point would be to put our stop loss to break even. There's no point making this a losing trade because this could be a potential liquidity grab above here's, and then you can maybe see another reversal. And then that would just mean price is ranging because you'd have resistance up over here and you'd have support down by these levels. So it would just be bouncing in between these two levels like this. So yeah, we got our stop loss to break even here. Anticipating that price can continue to run up. You know, from where we are, we want to see price move up another 30 pips. Roughly 30 pips. Oh, nice. Awesome. Wait, where are we at? We filled not even 65% of the range. We can continue to move up here towards 29.17. Okay, awesome. Awesome. Look, we're having reaction over here by 65% of the range. Yeah, I'm going to secure it. I'm going to secure it. I'm not going to be greedy here because we've tapped my break-even zone. Usually we can have some reactions off this mock. Remember, we sort of had a reaction on the previous trade and it stopped me out of break-even before melting. But I think at this point, man, there's no even point why price would come from 65 all the way down over here. On the previous trade, it was a bit closer to 65 because the range was not as big. But since we have a bigger range, yeah, there's no point for it to hit 65 and then come all the way down over here. Because typically the market will, this is where people get a lot of FOMO. You know, they miss a move like this and then the FOMO really starts to kick in. So then markets just keep moving in that direction. It doesn't give you a chance for re-entry because you missed out. See, now prices already filled up the range. I think that was a nice move. That was a really nice confluence here. And we could have actually, if you look at what's happening, we could have re-entered. Damn it. We could have re-entered this trade. We could have scaled into this position. Because, you know, price broke above resistance. And then the next candlestick again rebroke the highs. We could have put a stop loss over here and maybe actually trailed our stop loss down below this candle where our new stop loss is going to be. That way we already secured some partials and then we can trail our stop to secure more partials and then maximize our gains. Oh, and we had the SMA confluence. Look at this. And we had the SMA confluence. Damn. That would have been really awesome. All right, let's see. Price action is moving pretty good here today. And what do you notice? Guys, look at this. Price came down. Sideways. Bullish. What happened over here? What happened here? Can you see the matrix? It does not get any simpler than this. Whatever you're going to learn about trading in the markets, I guarantee you it's not getting any simpler than this. See this on the 30-minute? What's happening here on the 5-minute? Man, simple but really powerful concepts. Let's wait. Market's moving down. It's retracing the move again. I'm going to remove this orange line. And now we're going to look to take one more trade. And this is going to be the last trade. This is going to be the last trade. Because I see we got a lot of volume here on this day. And the good thing about this day is I'm seeing my entries are playing out a lot. You know, usually when you see your entries are playing out a lot, they should typically play out back to back. And when they're not playing out, they typically lose. So you see this was another entry over here. Price broke below support and you had clean range down towards this next support area. And let's measure where that reaction is. So pretty close towards that 65%. We didn't entirely hit it, but pretty close, and then price reversed upwards. But that was one sell over here, and we got one sell here, and we got one buy here. So I think this is a pretty nice day for PA. Let's do one more trade. And this is going to be a London Open trade. Or close to London Open, I think. Because we already have our clean range here by 29.13, and we have another clean range all the way up over here. So you see, exactly the same exact thing that we're waiting for happening here, we're going to wait for it to happen here. But we'll see how the confluences are lining up as price comes towards that zone. Because I'm not looking for sells. You see, the sells are so far away. These sells are not like a 5-minute entry. These are way too far back. We're just looking to trade the most recent bit of price action, because, you know, the more recent the price action, the more it makes sense for the moves. So you can see this is a more recent accumulation and break of accumulation for volume to come out. So more recent, the more value that price action will have. So let's see if we can get some kind of candlestick entry over here. What should we do, guys? Should we impulse buy, or do we wait for a candle to close? Right in the chat, impulse entry, or do we wait for a candle to close? we're gonna go big on this trade, so we'll risk like, fuck it. Let's do I'm up 9%. How much do we risk? We'll risk like what, 5%? Wait for the candle. Yeah, let's wait for the candle because it's a pretty big risk. I'm gonna risk 5%. 5, 6, 7, 5, 6, 7, 8, 9. So I'm gonna have 4%. Worst case scenario. Worst case scenario, we end the simulation with 4%, and no big deal. But we're gonna risk 5%. So if we're gonna risk 5%, man, we gotta be sure that price wants to move up. Guys, what do you notice? Can you see it? Can you see what's happening? It's the same thing we've been talking about the whole time, chat, the whole freaking time. You're in this area. We're in this zone right here again. See what's happening? We're here at a point A. So we're back at the accumulation. So this is where orders are getting built up before the move happens. This is like the auction. This is like the auction house right here. Man, this honestly, it does not get any better than this when it comes to reading PA. I'll even consider an impulse entry, guys. I'm gonna take an impulse entry because the reason I'm gonna take an impulse is the more candlesticks that are printing, the more data that I'm getting. And if we consolidate like this and break above these highs, I don't see any reason as to why price cannot go up. How do I get your SMAs? Oh, you can download them in the description box. We got free SMAs over there. Or you can join our Discord and you can get it on the Discord. Either way. But yeah, we can take an impulse buy here because we have a few confluence. Prices come down. It's consolidated. Write a 1 in the chat if we're together, guys. Write a 1 in the chat if we're together so far. If we're together with what we are seeing. Write a 1 in the chat. Are we together, guys? Are we together? Are we together? Very important because this is going to happen to you next week. The market's going to give you this option. We're going to have these opportunities. All right, I see 1s in the chat. Nice. All right, good to see. Good to see. Let's see now if candlestick can break above this consolidation here, and then we can try and catch a running trade. I see manipulation. Exactly. We got the manipulation at the bottom too. That's when all now the extra stuff comes in. This is now where if you want to bring out your RSI, you can bring out your RSI. If you want to bring out your volume delta or your point of control, I think it's just going to make you feel good about the trade. You can bring out your SMAs and all that stuff. Now that's when you can start getting a bit complicated with it. Just to see like what's really going on here. What are all these confluences lining up? Am I lining up a consolidation play, swing entry model, shotgun? Like what else is happening? RSI oversold. Maybe the daily is trending bullish. Now you can get complicated. Liquidity grab. Oh, now that thing ICT said about the inverted unicorn. Maybe you have that here too. That's when like all that other things that you learned in trading, I think they can come into useful. They can come to be useful to you because that will give this trade more value as to why it should go in a certain direction. But it shouldn't hinder your analysis of where price should go. If anything, it should just allow you to take more risk. So if you have like a very good confluence, you can take more risk. Or if you're doing like a funding challenge and you need that like really good A+ setup, then you're going to be like, okay, this is my trade. So then that's when all that stuff is going to come useful. But to actually catch the move, you don't need to know all of that stuff. Just the basics. If you master the basics, then you're going to master a lot of other things. All right, looks like we're coming up to break. I'm going to probably put my stop loss below this candlestick here within the range. All right, so it's breaking. Kind of coming up a bit high over here. How many pips is that? About 3 pips? All right, whatever. Let's take a buy. We'll put our stop loss just within this area here. Or below this wick. Or below the support. Let's put it below the support. I think it's a bit safer. Let's put it below that support. Because sometimes what can happen is the next candlestick can, let's say, open up, take out these lows, and then reflip to continue to move up bullish. So then that's going to leave behind like a little liquidity grab situation like this, and then continue to move upwards. Sometimes. So yeah, just to be safe. Nice. So we're getting a potential shotgun entry here, guys. Candlestick closed above resistance. We got the SMA confluence. And looks like we're starting to break above the previous highs. So we got shotgun and consolidation break confluence. How many pips is this? 33. Oh, wait a second. I said I was going to add more risk on this trade. I said I was going to risk 5%. I only put 1.50. So let's add in some more risk. Let's get out our Fibonacci tool so we can measure the range. So when it hits, basically when it hits 65%, that's when I'm going to put my stop loss to break even. That's if price doesn't come down. You know, if it comes down at this point, then we're just going to have to see how we can reduce our stop loss. But since it's moving up, I'm thinking about where can I put my stop loss to break even. All right, I'm putting my stop loss to break even here. Oh, nice. All right, so wait, what are we going to do? We have to close partials. We have to close some kind of partials. I'm going to close 80% on this first position. And then let me wait and see what happens. I want to close another 80% soon. Yeah, I'm going to close 80% on this next position. Both trades are set to stop loss to break even at this point. Come on, Goldie, fly. And what I'm going to do next is I'm going to trail my trades now. So I'm going to trail that first position. And we're going to trail the second position. Just to lock in profits. Oh, can we survive? Oh, SMA is coming to the rescue. All right. Let's continue to trail our trades. We'll trail this position now below these wicks. Since this is our last trade of the simulation, let's just go crazy with it. We're going to trail the 5-minute candles. All right, so this 5-minute candlestick has closed. Should we trail? You know, the problem with trailing, trailing bearish candles, because the bearish candles usually have a chance to get taken out. Whereas bullish candles, usually when you have a bullish candle, that's signifying like some kind of a continuation. A bearish is just a resistance. So whenever you're trailing 5-minute candlesticks, trail the candles which are going in the direction of where you think price is going to go. Or it's starting to break the highs. Let me delete this thing over here. It's starting to break the highs. Okay, so if it's breaking the highs, then at this point, I wouldn't expect price to break the lows. So we got a small little development going on here. Yeah, I'm going to take this and then I'm going to move this one up here too. Let's see what chat's saying. Oh, would you not look at this one on the 1 minute at all, even if it was just a help, I would look at it on the 1 minute. You know, you could take it off for 1 minute or even a 5 minute, because it's like the same idea. Because even if we go on the 1 minute, it will still be that same consolidation. I think on the 1 minute, we'll just be to see if we can get in a little bit sooner. But definitely this would be the same sort of like idea over here, that we're just breaking out of the consolidation. But yeah, we could probably have seen on the 1 minute. 1 minute over here. I'm pretty sure there are a few more entries in there too. Like we got one right over here. Gave a little bit of drawdown, about 14.5 pips. And then it continued to move upwards. And then we have some other scaling opportunities here as well, Luke. So check this out. We have this area, break of the highs, against stop loss either below here or even below here. And that one continued to move up. Man, this looks like it's gonna be a crazy runner, to be honest. I'm gonna keep trailing this. It's great. At this point, I'm just gonna have to keep securing as much profit as I can. Because I think this candle here is about to close. Next candle's closed. Holy. Holy chat. What should we do over here? Should we let it run or should we actually secure everything? Man, you know, the whole idea behind this simulation is clean ranges. If you're going to take something away from the simulation, just take away the power of clean ranges. So you see, we're getting distribution again. We're getting the same exact thing that happened back over here. We're not reinventing the wheel. There's nothing new that we're doing. It's the same thing. It's like clockwork. The market repeating itself over and over again. So should we secure all our profits or should we just let it run? I'm gonna keep trailing here for now. Should we keep trailing, guys? Up about 21%. Peep and creep, follow it until it gets stopped. You're already secured? Yeah, we're already secured. We're even above the range right now. This just looks like some crazy price action. What the hell is going on here? Did we have any news? This is a London Open, mind you. This is London Open volume. So we also got London Open confluence for this buys. It doesn't seem like we had any news. But obviously we don't really have news during the London Open. Yeah, 21% would do you nice. Then let's secure another partial here then. Let's secure another 80%. Secure another 80%. See, you can always close partials. Nice. Awesome. Oh, now we got stopped out. Oh, actually, that was a beautiful exit. Holy. All right, that was a bit lucky, guys. Gotta admit, that was a little bit lucky over there. So we secured 80% and then, you know, price retraced a bit. I actually thought this would continue moving up. Yeah, I think this is really good. Secured some profits here. Ending the simulation was at 21%, but we did go heavy on the last trade. Remember, we did risk about like 5% on this position. Oh, let's see if it happens again. Let's see what happens here. Candlestick has broken the highs. Is it going to continue to move up, guys? Oh, it still moved up. And what happens next? Okay. We're not going to get lucky the whole day. But, you know, how many pips is this? Close above resistance, stop loss below here. That's about 19 pips. And it pushed up about, just about 11 pips on that one. Yeah, that was an awesome way to end off the simulation. Man, just crazy PA. And this is also mid of the week volume. Basically just replicating what we've been doing the whole time. Same entry model, same executions, clean ranges, and I think that's about it, guys. Hope you all enjoyed this little simulation. I hope you can take some of this knowledge with you into the next week, and I do hope it's going to help you hold trades longer, and I think it will. And you know, if you want to rewatch the video, you can always rewatch the video. But I will see you guys in London session tomorrow, and let's see if we can catch any nice trades. Adios, everybody. Take care.